Deven Choksey is now with us, joining us on the show. Deven, thank you very much for joining in. Let's talk about Asian Paints and the CCI order. Just when things appear to be perhaps bottoming out for Asian Paints, analysts have started turning bullish on it, saying valuations are more than 1 times below, the long-term averages. We've got this CCI penalty now, the CCI order. Do you think it's going to be a big negative overhang, and how will this play out?
Yeah, good morning. Well, when you are an industry leader, when you are controlling 1/3 of the total market in the industry, and obviously, I think when the competition is increasing, all kind of situations would arise. I think one which we are probably seeing, but that is not taking away the long-term prospects of this particular business and the company's capabilities as well. They have been in this business for a long period of time. I think out of the total home decor business of about 1,50,000 crore in the country, if the paint business is commanding about 90,000 crore kind of a total size, and of which I think if Asian Paint is 35,000 crore kind of a company, obviously I believe that I think the kind of challenges would come to them, but I think this company is very integrated to meet these particular challenges. So I don't think that takes away the prospects as we see it today. On the contrary, current year appears to be more promising on 2 counts. On 1 count, I think the raw material, the input cost is remaining under control, so which is giving the promise for better margin for the sector as a whole and companies like Asian Paint in particular with a large capacity that they have. And on the other side, I think the re-rating of business is now started to happen because of the previous fall in stock price. I think again the stock price is started becoming slightly more stable and it could have re-rating. Also because of the fact that the business conditions improving on the other side. So we remain cautiously optimistic about the prospect going forward for the company. Maybe a small hurdle at this point of time on the CCI order.
Not sounding too perturbed, Deven. That's interesting. And so CCI order is one aspect. The other is a larger question on, is the worst over for the paints industry? Just comment on that as well. I mean, we've seen how things have played up. The Birlas are there, JSW is there. Akzo Nobel has been snapped up. Too much has been going on. Is it time to start buying paint stocks, or do you think we will probably see a little more of a price war perhaps till things stabilize?
I think initial phase should be of taking some amount of market share is something which one cannot rule it out. And that's where more than the price war, I think they may probably end up giving more amount of incentives to the retailers from the point of view of, I think, cornering some part of the market share. And that is understood. Now that hurts the domestic, the newcomers in more than, I think, the existing one. Largely because of the fact, I think that they would be initial years, first 4 or 5 years, I think they'll be having a situation of bleeding in the business. For JSW, I think the situation is slightly different because Akzo Nobel is already established with around 50 to 55,000 crore distribution, 50 to 55,000 distribution points that they have already established, and the business is profitable. But for Birlas, I think it's going to be a tough situation as we see it. In my viewpoint, I think more than the price pressure today, I think the requirement should be how the market is doing. And that's what I think one would keenly observe here. We see in next 10 years' time, the size of the market growing from 90,000 crore to somewhere around 1,50,000 to 1,70,000 crores. So obviously, I think the kind of overall paint business is growing from current levels to, I think, almost double in next 10 years' time. So we remain relatively more optimistic about the possibilities going forward.
All right. Hi, Deven. Good morning. Dream, folks. That's going to be a stock in focus because certain programs of ICICI Bank and Axis Bank have been discontinued, and they're saying the impact is going to be material now. The stock, as it is on this fear, had pulled back, I think, close to around 15 to 18%. What's your view? In all probability, it starts off in the red. Will you look to buy, or will you say there's too much of skittishness out there, too much of uncertainty? You rather just stay away.
Good morning, Nigel. I think disintermediation in this business, I think, is something which one probably is asking for. I don't think that, I think, the aggregator model on which this company created, I think, a significantly large presence works after a while, because once, I think, the bank partners who are basically also having an equal amount of penetration ability and through the use of technology, I believe, the fintech platform in particular, I would think that I think they are basically going to create their own presence, significant presence on their own. And that's where I think even the margin related question would come, that why should one pay for an aggregator? Whereas I think one can use the technology, leverage the technology and go to the last mile as far as I think all the airport and the lounges are concerned. So in my viewpoint, I think that's going to happen. The disintermediation, as we call it, as is happening right now. Not too sure how exactly Fox will probably reshape the business model in the current situation. So till the time clarity emerges, maybe not enough confidence to look at this particular business.
Okay, so yeah, DreamFox, let's see what the market reaction is going to be. The thing is that the fear of this happening had been there in the market. So has it already played out in the stock price? Will we see further damage today? Let's see. We've reached out to the company for clarification. Let's see if they're willing to offer one. Auto sales, Deven. I mean, obviously, it's the same picture, right? Very sluggish on passenger vehicles. M&M continues to perform very well. Bajaj Auto has been lagging last couple of months. It's not just the June numbers now. Autos. Are you buying any stock? What would be your picks?
Yeah, I think the individually companies have to be looked into. Bajaj Auto's case, fortunately, I think the three-wheelers and the EVs have picked up well. Though the two-wheelers haven't done enough, I think in the domestic market particularly. So that is a lag as far as I think the business is concerned. Mahindra is a different story altogether because every successive model that they've been launching, they've been collecting bookings in advance for 1.5 to 2 years at least. And that's where probably I think the company is having relatively more clear visibility as far as the business is concerned. As I see it, I think the current year appears to be more promising on the new vehicle segments. I think particularly the buying of new vehicle segments, largely because of the disposable income increasing the hands of the people and at the same time cost of fund coming down due to the fall in the interest rates. Given that situation, I would think that somewhere from the second quarter after, once the festive season starts, probably we are likely to see the better numbers coming up from autos. July to September, I think we are not expecting too big a growth as far as numbers are concerned. So can safely say that beyond first half, the second half should remain relatively more stable for most of the good companies in the auto space.
Okay. RBL Bank, that's been a stock on fire. I think 4% up yesterday, 21% in the last 1 month. And since the beginning of the year, 65%. Now there are reports which suggest that Dubai-based lender Emirates NBD is exploring a significant minority stake in RBL Bank via primary capital infusion. Your thoughts if this transaction were to materialize, and even outside of that, fundamentally, how is RBL Bank positioned at this juncture?
Well, the challenges would continue because I think you are competing with the larger companies who are equally strong with their presence and using technology at the core level. So from that perspective, I think the challenge would continue. But yes, in the banking business, I think the growth would also emerge along with the technology when you strengthen the balance sheet. In this case, I think the balance sheet strengthening activity is appearing to be more promising. And that's where probably I think with the technology front end, they could possibly get some of the lost market share. As such, I think whatever the repairing of the balance sheet had to happen, I think is completed, I believe. And as a result of which, I think the future years will appear relatively more promising. I believe the market is having that kind of optimism at this point of time. That's where I think the stock price is getting reflected into. In my viewpoint, I think selectively one can look at, I think, such kind of opportunities.
Interesting. All right. Deven, I wanted to ask you about Adani Ports. We have got the June update that's come in there. And the growth that they've delivered is around 12%. It just hit the screen, actually. For the first quarter, it's also up by close to 11%. The guidance, remember, they had given was around 505 to 515 MT, which compares with around 450 MT in the previous fiscal year. So it appears that they're on track. What's the view on Adani Ports?
Yeah, Nigel, I guess I think apart from volume, I think the value realization is equally important because I think the cargo handling and the mix of the cargo handling resulting into better yield is something which one is asking for on a per ton of realization. I believe that I think two factors are working in favor of the company. On one side, due to the automation, the cost factor is coming under control, and as a result of which it promises to add into the margin. On the other side, I think the yield is improving, and as a result of which, I think on a 10-12% kind of a volume growth, we are talking about a slightly higher yield compared to what one has seen in the previous year because of the mix as well. So in my viewpoint, I think this remains absolutely very promising. This business is a cash-generating business, and obviously, I think you are going to see a larger amount of growth also through the inorganic acquisitions. And the ones that they have acquired, I think they are likely to start contributing in coming year and quarters as well. So we remain distinctly optimistic again, I think, for the business per se as a whole. Any corrective price, I think, would be a better opportunity to add into the stock.
Deven, thank you very much for joining us this Wednesday morning. We'll get